In the last year, market has proven to be pretty volatile and unpredictable. I had lots of people asking me if they should sell down their investments either privately owned or within their superannuation funds. I always hear that cash is better and safer. So let's have a look into this a little bit deeper to understand if such a decision is good or not in current market conditions and what impact it can have on your overall value of your assets, value of your estate, and income, especially in retirement. My name is Katherine Isbrandt from About Retirement. I'm certified financial planner and you are watching About Retirement TV, the place where you can learn all you need to know about how to be best prepared for your upcoming retirement or how to improve it if you are already there. Before I get into our today's topic, I would like to say something important. I started this channel coincidentally just before COVID in January 2020. Today's video is number 179, with a video being presented every Thursday since commencement. I never realized how much of the impact this little channel will have on pre and post-retirement community. How much also enjoyment I will get out of it. Seeing people that are willing to learn, are willing to absorb my explanation of complex rules and regulations we have around superannuation, government benefits, contributions, savings, investing, estate planning. The list is long. I don't have a huge team of video experts behind me. I started this channel with a sheer belief that I can make a difference in lives of many people, purely because I was lucky and privileged to step into the profession that actually has impact on every single part of our lives. But after doing this for 3 years, week after week, I can see and feel the toll it has on me, my family, the time that we have together. Also, I do need to devote a little bit more time to my practice clients as they deserve a great deal of care and assistance. For this reason, I would like to say that I will continue my videos, but from now on, they will be coming out once a fortnight rather than weekly. This will give me a little bit of space and air to have time for other things as mentioned before. Also, another reason is that I want to keep my videos interesting and relevant for you with a quality content that has immediate benefit that you can apply to your lives of what to do or what not to do, which is just as important. So here it is, my big announcement. I am most certainly continuing to create more videos for you, but from now on they will be prepared on fortnightly basis rather than weekly. So after that explanation, let's jump back to our market volatility issue and what you should do in such circumstances. Should you sell your investments and hide money in cash, or should you continue holding on to investments that you can see daily are slowly reducing in value? Markets have been volatile in 2023. Have a look at this chart. We can easily see that whatever balance we started with at the beginning of 2023, that's exactly what we end up with today, almost at the end of 2023. And we can clearly see all the ups and downs from month to month, and this is exactly what scares a lot of people, and they sell investments and run to the safety of cash. As we know from investing perspective, 1 year is a very short investment time frame, and you should never invest money if you know you might need it within a year. But let's just extend the time frame for a slightly longer period of 3 years. Can you see now how that volatility of the current year becomes so much less if we expand perspective? One thing that I wanted to point out here is the second chart that shows market transactions volume. Can you see the huge selling frenzy happening in February 2020? This is when markets collapsed due to COVID. The sheer size of selling was unprecedented, people trying to hold on to as much of their money as possible, while the market was in a freefall. But the unfortunate outcome of this behavior is that no matter at what point in time those investors return to investing, they would not be able to make up those losses. It is impossible even for professional investors to know when the market will bottom. This is an example of how best to lose your savings, not how to save it from losses. As you can see in the charts, markets recovered very fast. So fast indeed that most people were taken by surprise when it started falling and consequently also when it started rising. But those who didn't sell and hold their grounds came out on the top. Yes, it can be frightening. Yes, we all worry, what if? But this has been the case since market exists. And if you wish to make any return on your savings and you want to make your money work for you, unfortunate part of the deal is that you have to accept some degree of investment risk. That investment risk can be minimized by many different strategies, which is essential, especially in retirement. But nonetheless, financial and market risk is part of investing. If you want to remove that risk, then we are talking about cash investing, which over a longer period of time has proven not to even be able to keep up with inflation. And now, if we look at the market chart over the period of 10 years, the picture is different again, with those annual drops becoming less significant. And now, since 1994, therefore over the period of 30 years, the picture is completely different, with the biggest drops due to GFC, global financial crisis, and COVID. This is the whole point of this story. Short-term drops are only just that, short-term market adjustments to various news. If you react to every single negative news, you will keep on losing money on both ends, selling when the market has already fallen and on the rise, as you will never be able to predict the market bottom. Therefore, you will lose most of the recovery time. I hope this video will help you to reduce your worries when markets are unpredictable and volatile. Please remember that there is a very low correlation between those political events and market returns. Yes, markets will be impacted in short term, but those events have very little impact on markets longer term, and you have to keep this in mind not to keep on losing your hard-earned money. If you found this video of benefit, please give it a like and subscribe to this channel. If, however, you would like an assistance and advice with investment management, or if you are thinking of retiring soon or have already retired, and you know this is my little specialty, hence the business name About Retirement. If this is you, visit my website aboutretirement.com.au to book a meeting with me to discuss your situation and how it could be improved and benefit maximized for your retirement. On each page you will find a little button, book a meeting, that will take you to my personal calendar where you can choose your preferred day and time for us to meet. Just please prepare all your financial details prior to our meeting. Also, don't forget to sign up to my newsletter that will keep you updated with all the changes that can impact your retirement and your financial outcomes. And now please watch the following recommended videos. What can I do with my super in retirement? And should I spend my money to have full age pension? Both provide a great deal of information when preparing for retirement to better understand super and age pension. I will speak with you in my next video. Bye for now.